Swing trading is a popular style of trading that sits comfortably between the fast-paced world of day trading and the long-term commitment of investing. Think of it as capturing a swing in a stock's price over a period of a few days to several weeks. Instead, you are looking for those medium-term trends, those beautiful upward or downward movements that you can ride for a profitable journey. This approach allows you to analyze charts and make decisions without being glued to your screen all day, making it a perfect fit for many people who have other commitments. The CSE is full of opportunities for those who know how to look for them. The market has its own unique rhythm, influenced by local economic news, sector performance, and investor sentiment. By learning the art of swing trading, you are not just gambling, you are developing a skill. You are learning to read the market's language, to understand its moods. It is an exciting journey that combines analysis, strategy, and a little bit of courage, offering a dynamic way to grow your financial future. Today, we'll explore the best practices that can make you successful, the common mistakes that can derail your progress, and the mental tools that separate winning traders from the rest. Whether you're completely new to trading or looking to refine your approach, this guide will give you the foundation you need to succeed in the Colombo Stock Exchange. The first and most crucial best practice is to always have a trading plan. This is your personal rulebook, and you must never trade without it. Your plan must specify what stocks you will trade, what setup or pattern you are looking for, exactly where you will enter the trade. More importantly, it must specify your exit strategy, your price target where you will take profits, and your stop loss, the price at which you will cut your losses. For example, only trade liquid stocks in the S&P SL 20 index only enter when a stock breaks above its 50-day moving average with high volume. Next, focus on risk management above all else. The 1% rule. Never risk more than 1% of your trading capital on a single trade. If you have a 200,000 rupee trading account, you should not risk losing more than 2,000 rupees on any one position. Example, buy Haleys at 90 rupees, stop loss at 85 rupees, risk per share is 5 rupees. To risk only 2,000 rupees, buy 400 shares. This practice ensures that a few losing trades won't wipe out your account. Use technical analysis as your primary tool. Learn to read stock charts and understand key indicators, support and resistance levels, trend lines, moving averages, and volume analysis. Finally, always maintain a trading journal. Document every trade, the date, stock entry and exit prices, your reasoning, and crucially, how you felt during the trade. One of the most destructive mistakes a new trader can make is revenge trading. This happens after you take a loss and feel an overwhelming urge to jump right back in. Instead of stepping back to analyze, you place a larger, riskier trade without a plan. You're gambling out of anger and frustration, a recipe for financial disaster. Another common pitfall is ignoring your stop loss. You set a stop loss to protect your capital from a big downturn. Say you bought at 120 rupees with a stop at 115. The stock drops to 116 and you cancel the stop, hoping it'll rebound. It then continues down to 100. By not honoring your plan, a small loss becomes devastating. A stop loss is your ultimate safety net. Always respect it. Falling in love with the stock is subtle but dangerous. Extensive research can turn into emotional attachment. That bias blinds you to what the chart is telling you. Be loyal to your strategy, not to a stock. The market only cares about price and volume. Avoid the temptation to overtrade. This can happen from greed after wins or from the need for constant action. You feel missing a trade means missing profits. Successful swing trading is about being in the market at the right time, not all the time. 3 well-planned trades a month beats 30 impulsive ones. Patience is a virtue and a profitable trading skill. To build a solid foundation in trading, you must stand on the shoulders of giants who have come before you. A great starting point is A Beginner's Guide to Short-Term Trading. I wrote it to break down complex topics into simple, actionable steps. A clear roadmap to help you avoid common traps. Another absolute must-read is How to Make Money in Stocks by William J. O'Neill. It introduces the powerful CAN-SLIM investing system, a framework for identifying high-growth stocks. O'Neill combines fundamental analysis like earnings growth with technical analysis like chart patterns. Use these methods to find the best stocks on the CSE for your swing trades. For chart mastery, read Technical Analysis of the Financial Markets by John J. Murphy. Often called the Bible of Technical Analysis, it covers major chart patterns, indicators, and theories. Treat it as a reference guide when things seem intimidating. Want to learn MACD? Want to learn RSI? Mastering these concepts gives you an edge interpreting market movements. Finally, to master the most important aspect, the trader's mind, read Trading in the Zone by Mark Douglas. It's about trading psychology, not charts. Douglas explains why traders lose and how to cultivate a winner's mindset. He teaches you to think in probabilities, accept risk, and trade without fear or greed. Reading this book can be transformative. Successful trading, 20% strategy, 80% psychology. Master these lessons to unlock your true potential as a trader. Swing trading is often described as a game of patience, and this could not be more accurate. The majority of your time as a swing trader will not be spent executing trades, but waiting. You will be waiting for the right setup to appear, one that perfectly matches the criteria in your trading plan. This is incredibly difficult for the human mind, which craves action and instant gratification. You might watch stocks making big moves and feel a powerful fear of missing out. You might be tempted to jump into a trade that is good enough but not perfect. The most successful traders are like patient predators. They can sit silently for days or even weeks, preserving their capital and mental energy. They know their edge, the market conditions with the highest probability of success, and refuse to engage until those conditions are met. Imagine tracking a stock on the CSE, waiting for it to pull back to its 50-day moving average. The stock may rise for 5 more days, tempting you to chase it. The master trader waits. When the stock finally pulls back as planned, they act decisively while the impatient trader is left in a poorly timed position. This game of waiting continues when you are in a trade. Once you've entered with a clear profit target and stop loss, your job is to let the trade play out. Trust the analysis you did before entering. Your plan was made with a clear, objective mind. Decisions made in the heat of the moment are emotional and flawed. Find comfort in doing nothing. Not having a position can be a valid, wise position. Your goal is to trade profitably, not frequently. The greatest battle a trader faces is not with the market, but with their own mind. Fear, greed, these are powerful forces that can derail even the most well-researched trading plan. Ancient practices like meditation and yoga offer powerful tools. They quiet the mental chatter, reduce stress, and cultivate a state of calm, focused awareness. This allows you to observe market movements without being swept away. See a losing trade, hit your stop loss, and accept it calmly, without anger, without frustration. Vipassana means to see things as they really are. Observe your breath, notice bodily sensations without judgment, notice thoughts, notice emotions. They arise and pass away. You don't have to react to every impulse. This training is directly applicable to trading. Urge to chase a rising stock, greed, panic sell during a dip, fear, observe the feeling, let it pass. Shambhavi Mahamudra Kriya, a powerful 21-minute yogic process from the Isha Foundation. More than meditation, it's an inner engineering tool. It works on a physiological level and an energetic level, bringing your system into balance. Reduction in anxiety, increase in mental clarity and focus. Enhanced ability to make sharp, intuitive decisions. Stay centered, stay stable, even during extreme market volatility. Execute your trading plan with precision and calm. The journey to becoming a successful swing trader on the Colombo Stock Exchange is not just about learning to read charts. It is about mastering yourself. It's about committing to best practices and avoiding common pitfalls like revenge trading and emotional decision-making. The path is one of continuous learning, but knowledge alone is not enough. The true test is mastering the psychology of waiting and using mental tools like meditation to build emotional stability. Opportunities on the Colombo Stock Exchange are real, and with the right mindset and strategy, you can unlock them. As you stand at the beginning of your journey today, be patient with the process, and most importantly, with yourself. There will be wins and losses, but every trade is a lesson. Embrace the discipline, cultivate a calm mind, commit to your education. Your journey as a thoughtful, disciplined, successful trader starts now. I wish you the very best of luck.